Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is David Howard. And David is a tax attorney with Hoag Fenton, Jones & Appel in San Jose. He's been both a lawyer and a CPA for over 40 years and has now become an inactive CPA. He retired from Deloitte LLP, where he was a tax partner for over 20 years. At Deloitte, he developed tax strategies for multinational corporations, Silicon Valley startups, family corporations, corporate executives, and wealthy individuals. His former clients asked David to return to practice, so he moved from accounting to law. He's taught extensively, including the California CPA Society, New York University Tax Institute, San Jose State Masters in Taxation Program, and much more. And these last few years, David has been working mostly with people on straightening out problems related to offshore financial accounts, trusts, and gifts from foreign sources, and dealing with the applicable forms. And so he deals with many well-meaning individuals who, for some reason, who have not filed these forms on time and are now faced with very large penalties. So in another program, we talked about what do you do if you've already tripped up. Now we're going to talk about how to keep your nose clean, how to handle foreign accounts that you may have overseas. So, Dave, there are a lot of people that think if somebody has a foreign bank account, we had the thing in the last presidential election.
Right.
That developed, one of the candidates had some foreign bank accounts, Mitt Romney, and so a lot of people think, oh, that sounds suspicious. So maybe, is that right?
Well, yeah. Well, this is an area, there's a tremendous amount of mythology, and Congress keeps passing laws, and I call them crazy laws because they duplicate each other, and they go on top of each other and on top, and it makes it a little bit difficult. In this session, we're talking about what if you want to just do everything right? How do you do it? It's a little tricky, but it's doable. And by the way, there's nothing wrong with having a foreign bank account whatsoever. And yet, when it was disclosed that Mitt Romney had an account in Bermuda, the Democrats made a big deal about that. They clearly must be up to something bad, and that is kind of the notion in America that either there's something somebody's getting away with if they have an account outside the United States, but there could be a lot of good reasons for having an account outside the United States.
Well, we've got a global economy these days.
Sure.
So people have business interests all over the world. And,
Sure.
So. And I can tell you, I've got one that does, and it's a pain in the neck to report all this stuff.
Yeah.
Well, anyway, so now let's say you're a U.S. taxpayer.
Yeah.
And you got some of these interests overseas. What does the IRS want to know about your interest in these foreign assets?
Well, they first of all, the basic law, the basic tax law that applies to all Americans is that if you're a U.S. taxpayer, U.S. citizen, or if you are a green card holder, or if you're a U.S. taxpayer for any reason, you must report all of your worldwide income to the IRS. Now, that's unusual in the world. No other country is quite like that. And for instance, if you've ever gone on a cruise ship, all those folks floating around, hardly any of them are Americans, because while they're floating around the ocean like that, they're not paying income tax any place. Because most of the countries of the world would say, well, you're not inside of our country, you're not under a jurisdiction. But if you're an American, you're paying your taxes. You must report it. So you must report all your worldwide income. Now, that's it. That's the law. But they think a lot of people are cheating. So if you have a foreign bank account, the IRS wants you to disclose to them that you have a foreign bank account. They want to know about it. It's on your 1040 on Schedule B, right at the bottom. You have a foreign bank account? Where is it? Are you filing the disclosure forms? Now, they also want to know, let's say you own a company, or you work for a company, you work for a great big company, and you have signature authority over an account outside the United States. They want to know about it. They think you might be able to get away with something. So you just have to make all the disclosure. You have to disclose all these foreign accounts where you have any kind of an interest. Now, where that gets to be problematic is, let's say your grandmother, you were born, your family comes from France, your grandmother still lives in France, and she set up a bank account for you. You might not even know about it, but that you do have a beneficial interest in there. You should disclose that to the IRS. Now, this gets to be a little problematic when, in a lot of foreign countries, it's very common to put an account or a piece of real estate in the name of the next generation person or a couple of generations down. So when that person dies, the property transfers. Well, is that a gift that should be disclosed? Is that bank account that maybe a piece of real estate and the money's deposits are going, is that a bank account that you should be reporting on? It's so much easier just to report on it if you know about it. And just say, Grandma, I'm going to have to report on it. Even though it's your money, I got my name on there, I'm going to tell the IRS about it. So instead of keeping this quiet, just disclose it. There's no tax and there's no penalty. But if you don't disclose it, then that's when you have to listen to that other session we previously recorded.
Right. So there was a time when you could have, let's say, that Swiss bank account and nobody would really know about it. And I think basically we'd say those days are over.
By the way, that full disclosure thing is with respect to U.S. taxpayers. It's still a secret place for others. They haven't all cracked the door open in Switzerland. Yeah, they're working on it. The Brits are working on it. The European Union's working on it and trying to crack that open in Switzerland and Liechtenstein and Austria and many of these other countries. But it's for Americans that we're forcing the door open. And so there are still secret bank accounts, just not for us. And you're better off not fiddling around with that stuff. You're better off disclosing it, better off not thinking in the back of your brain you're going to get away with something. Because on the other hand, if you want to do everything right, which is the topic of this discussion, it's a little complicated because we have laws that overlay laws that overlay laws. And it's funny because the Republicans don't want tax cheaters out there. The Democrats think that any foreign bank account is owned by a rich person, and all rich people are cheating somehow or other. I don't know. I shouldn't typify the parties, the political parties. I think they're all nuts myself. But the approach in this area is both of them go after these foreign accounts, and we have laws on laws on laws of disclosure. In fact, they recently added this one that you have to file a Form 8938 and attach it to your 1040, disclosing if you have foreign investment accounts or a foreign bank account. Well, that overlaps with the FBAR, where you also have to disclose your foreign bank account holdings. Right. It's a little bizarre that they overlap. And then if you take a look, if you have foreign passive investments, and if you have it inside of a corporation, that's going to be foreign personal holding company income, which would have been anyway, which you must immediately report in the United States. So even though you have a foreign corporation, you still pass that through immediately into the United States, and you have to file the appropriate forms.
So it's going to be currently taxable. You're not going to get a deferral.
Right.
Okay. So I guess I'm just going to throw this out, and then we should move on.
Sure.
But two things. One is I think that the people in Congress like this particular area because it's a place where they can collect money for the Treasury, which desperately needs it, without really having to make any new laws at all, or to say that there's a tax increase, where the laws are already there. It's just that they needed to be enforced, and now they are being enforced.
Right. They're forcing the disclosure. Now, I'd say when the IRS first started moving into this area after 2008, when the whistleblower for the Union Bank of Switzerland told about all these accounts, the IRS was under opinion that there was just a vast number of cheaters out there. And what they found out was that there were just a vast number of people that had no idea that they really had to report the account or that they had to pick up the income. And they're just sweet, nice, honest people, but they had no idea that account that they inherited from somebody, and they just left it overseas and just left it alone. They never touched the money, never drew it down or anything, Well, under U.S. tax laws, it's currently taxable income to them.
Okay. So we need to move along because you've got a lot of forms that we wanted to go through here. So let's talk about a few types of foreign asset interests, and then you can talk about the disclosure that's required and so forth.
Sure.
So now you've got a bank account that's in your own name.
Okay. If you have a bank account in your own name, Schedule B 1040, X, you own this account. If it's over 10,000, you have to disclose it. File the FBAR, disclose if it's over 10,000. If it's over another threshold, you may also have to file the 8938. So there are three different forms.
It's a really high threshold, like 250,000 or something.
Well, it's if you're married, filing a joint return, 150,000. If you're filing a separate return, 75,000.
Okay.
And it can be either investments or bank account, not real estate. You don't have to disclose real estate.
Okay. Now, what if you have an investment account in your own name?
Once again, those same things, the same 1040 Schedule B, the FBAR, the 8938, but you got to watch out for PFICs. And the PFIC is where you've invested in, say, a mutual fund that doesn't distribute the earnings annually. They just roll them over. You need to burrow down inside of it and see and pick up the income as if it were distributed out to you. Also, there are 10 different elections that you need to make on a timely filed PFIC tax return to properly report the PFIC. And I'll tell you, I defy anybody just knee-jerk knows something's a PFIC. You really need a professional advisor. So you got to be careful if you're investing in any kind of a house fund, something, well, this is our own little mutual fund that you put the money in. You may have special disclosure requirements.
Okay. What if you own some real estate overseas?
Well, that's simpler than anybody would ever think. You just got to report it on your Schedule E. Assume that there's no associated bank account. You have a manager, they collect the rents, they write you a check periodically. Pick up all the income, and you have a different depreciation rate. On foreign-owned property that's depreciable, you have to use a longer life. I think it's like 40 years. Okay. Straight line.
What if you're a shareholder in a foreign corporation?
Well, yeah, that's a tricky one. People don't realize, we have people living here in Silicon Valley from all over the world. They go back home to Vietnam. They set up a little local company that's doing business with their company in the U.S. They must file a 5471 disclosing that that company is owned by 5 or fewer U.S. persons that have 50% ownership interest. That 5471 has a big penalty, but there's no. It may or may not trigger current income tax. It's a rather complex return. It's also where you show your intercompany transactions between your U.S. business and your foreign business. So it's a really complicated, it's a really important return. And if you're not doing your 5471, you can be in a lot of trouble.
Okay. What if you have a corporation that also, again, it's a foreign corporation now, that you're a shareholder, and it has interest, dividends, or royalty income?
Well, oh my gosh. Well, this is the problem and by the way, this is when Google and Apple have their accounts overseas and they don't bring the money back. This is an issue for them as well. But if you have passive type investment income inside of a corporation abroad, and this would be interest, it would be royalties, and it would be dividends coming into this company, that may very well be considered to be foreign personal holding company income, which is subpart F income, which means you must immediately report it as taxable income in the United States.
Oh boy.
And so you can't. You got to be careful of that. If you have a foreign business, It's not that you shouldn't have a foreign business. You just got to do it right. That's all.
Right. Okay. What if you transfer assets to a foreign corporation?
Yeah, I had a client here in Silicon Valley. Every time he went over to visit his little company in XYZ country, he'd go to Fry's, or he'd get some Dell computers. He'd bring over a bunch of stuff in his luggage and leave it with the company. You have to disclose that on a Form 926. You don't file it, $10,000 penalty. You just got to be aware you're making contributions of property into a foreign corporation, foreign business. You got to file. You got to disclose this to the IRS. Form 926.
Oh, fun. Okay, your partner in a foreign partnership or a pass-through entity.
Well, again, that's not too bad. You just got to pick up all the income that's flowing through to you. And you got to be careful because sometimes you think, oh, that's a foreign corporation and they don't distribute, they only pay out dividends. But so the trick there is you got to find out what a GmbH is or whatever all those initials are of the company that you're investing in, because it might be a partnership for U.S. tax purposes, meaning that the tax is going to be paid by you directly. You're going to be reporting the income immediately.
Don't some of these have to be reported on that 8938 form too?
Well, yeah, if it's you got to look at that. If it's an investment type of situation, but
Okay.
yes, you may have to pick that up.
Okay. What if you have a signature authority over an account, but you don't have a financial interest in that account?
Yeah, you still have to disclose that. And of course, the IRS has been kind of slow on pushing that one. Nevertheless, you have to disclose that on that FBAR report, where you report your foreign banks. There are three big sections, and one is where you have signature authority but no beneficial interest. You have to disclose this stuff. Now, there are certain, if you're the CEO, if you're an officer of a big company that has operations all over the world, they have some special consolidation rules that'll help you out there. But you've got to disclose it. They want to know that you have that authority.
Okay. One thing that we haven't talked about really on either one of the shows is there's a change for this year, although I think we sort of indirectly said it, but we're going to e-filing for this year.
Right. Which e-filing is a bit of a challenge for anybody. But if you'll go through your CPA, who's set up to do it for you, he'll do it for you, or she'll do it for you. But you can do it yourself. You can go online. It's a little complicated for the individual. But that is better, because in the olden days, some of these forms, the FBAR, had to be at the IRS offices or Treasury offices. The form itself had to arrive on or before the 30th of June, and that means you can't just postmark it. It had to arrive.
Right, and no extension. So if you have your individual tax return extended due date is October 15th, that doesn't apply for this FBAR form.
Right, and it's not an attachment to your 1040. It's a completely separate report.
Yeah.
And so you may just, the CPA say, I'll extend your return. You're exactly right. Well, I'm extended October 15th, but not your FBAR. Now you're late. And late filed FBAR, they can hit you with $10,000 penalty. Yeah. So you got to get that little puppy in there.
Yeah.
Yep.
And I think I'll mention this. I had this happen last year. I'm kind of embarrassed about it. But when you poll the FBAR, because of the same information is used for the 8938, you can trip up your poor tax return preparer, because he won't have the input for his 8938 because you pulled out the FBAR. So really, you should have them do both for you and not be a cheapskate and try to avoid having your.
This is where you get these duplications, and you again they just have this layered on. They have these rules on top of the rules, and they don't always read what the old law was. No, and it does make it hard to be a tax return preparer. This area is maddening.
Yeah. Mm-hmm. Well, what if you receive a gift from a foreign person, or from I don't know how you get a gift from a foreign corporation or partnership. Maybe you can even talk about that. So that's really interesting. If you actually read the law, the disclosure law, there's nothing in there at all that says the IRS only needs to know about a gift from a person if it's over $100,000. It doesn't say that. The disclosure is required if there's any foreign gift over $14,000. That's the limit. But the IRS says if it's from a foreign person, you don't even need to tell us. But if you get a gift from a partnership or a corporation over $14,000, we want to know about it. Why? It's because of what you just scratched your head about. Corporations and partners, they don't make gifts. Isn't this a distribution of income? And they want to know about it at this low level, because they want to find out what kind of a gift is this corporation making. And because again, in America, partnerships and corporations don't make gifts. They might to their own foundation or something, but or they might make gifts to foundations. But to individuals, it's pretty rare. They don't have that. Yeah. So they do want to know. They want to dig into that. Right. And just in case people get mixed up, so there's just a higher threshold for gifts from individuals. There's $100,000.
Right. And there's no tax on a gift. There's no tax at all. You just might as well disclose it, because the penalties are awful for not disclosing it. People don't know this, so they don't know they should.
So what if Grandma sets up a bank account and puts your name on it as a joint tenant, and Grandma's a French national?
Well, this is a tough one, because Grandma, did she make a gift or not? She put your name on it, but maybe she's managing the account. She's drawing all the income out. She has no intent. You try to go sell that piece of property. You can't sell it. it's really, technically, it probably is an incomplete gift. And an incomplete gift is not a gift that you need to disclose. But do you want to argue with the IRS about whether it's a complete gift or incomplete gift? I just disclose it if you know about it. But if Grandma set it up, and I've had a bunch of people like that, Italy, Hong Kong, all different places, France, where the relative, I'm working on Switzerland right now, where Grandma sets up the account as she's retained a power of attorney. When she dies, the account will go over, hasn't been disclosed. That's a tough one. It would be better when it's all set up, say, Grandma, we got to disclose this thing, you got to know the bank and do it. So if we have any kind of control over it up front, this is the ounce of prevention's worth pounds of cure.
Okay. Now, what if your name is put on the title to some real estate, but your relative still holds the power of attorney or life interest on the property?
Yeah, that Hong Kong is really common. That's just really popular. And again, Italy. It is the same point that I just made, is that if it's not a bank account, the disclosure of the ownership of foreign real estate, there's not much to report. There's not, you'd have, to the extent that the income out of that's attributable to you, you got to pick it up. But the problem is, did you have a gift of over $100,000?
Right.
And the IRS will come in, and then when was that gift made? And if it's an incomplete gift, I just wrote an opinion letter for a client. It's one opinion letter for me as to whether or not he had to disclose that same situation in Hong Kong, where the grandpa there's no estate tax. And yeah, that's a tough one. It's a matter of fact, did he complete the gift or not? Woo, better to disclose it.
Okay.
When in doubt, disclose it.
So what if your great aunt in Italy sets up a savings account for your kids and puts their name on the accounts?
Yep, same kind of thing. If you know about it, it's better to get it disclosed, even though the kid, who knows when they actually get it. If the amount of the income is not very much, it's nominal, you may be able to wiggle your way out. But that was the subject of our other interview. If you know about it up front, say, okay, Grandma, this is such a sweet, kind gesture that you're doing. We need to report this to the IRS.
Now, related to that, again, if the balance in the accounts is less than $10,000, then don't have to report them. So if they've got these small accounts.
Right, and the same way, if they don't, as an individual taxpayer, I don't know I can't quite remember the limit, if it's like $100,000 balance up, you don't have to file the 8938. But it's on tiny little accounts they don't care so much.
All right, now they've got this new legislation, let's just say newly effective legislation called FATCA.
Yeah.
And relates to financial institutions. So maybe you can talk a little bit about how that.
Well, they want the foreign banks to report to the IRS any payments or earnings that have gone to one of their U.S. taxpayer customers, and they want to issue a 1099 and send a copy to the IRS. There's a lot of pushback from the different governments and banks in the world, but they're caving bit by bit. And so what you should do is, if you have an account in a foreign bank, and you should be sending them a form W-9, which is a pretty simple little form, and then indicate, I'd put a transmittal out here on it and save the evidence that you sent them the W-9 form. Certainly they need it for 2014. The W-9, your name and address, and your taxpayer ID number.
Same form that you give to your bank here in the U.S.
Right.
What if you have a foreign trust and you set it up, you're the grantor?
Oh man, these foreign trusts are really scary, because the grantor. Now, why in the world? The grantor is the one who created the trust, puts property into the trust. If you're a U.S. person, why'd you set up a foreign trust? Well, you might have kids or family or relatives live outside the United States. You want some bank or somebody, an investment advisor, somebody to hold it. You might be doing this in order to for asset protection. You set up a trust. Hold property, legitimately transfer the property over there, trustees holding it, so that if you're ever attacked or sued or whatever, that this property is safe. You need to disclose that. You need to disclose your transfers over. And if the income is attributable back to you or enhances the value, you've got to pick up the income. So you might be doing asset protection, but you don't get to avoid your income tax.
So fortunately, we're getting close to the end, but I have to let you know we just have about a minute and a half left, so maybe two. Foreign trusts, you're the beneficiary.
Oh, this is a tough one. This is really kind of scary. I'll do it real fast. So now your foreign relatives, they have a lot of money. they put money into a trust in a foreign country, and they have distributions come out to you periodically. If they say, all the income goes to my grandson Dave, I got to pick up the income. But if they say instead, make a distribution to Dave equal to the amount of income, but make it out of the principal, out of the corpus, that's a gift, no tax. So you want it to be that kind of a gift. What if I don't take the gift out? I left a little money behind. Now I'm a grantor. I'm funding that thing. I better be filing the tax return and reporting it. So you got to really watch that one. You really got to watch over these foreign trusts.
Right. So
very tricky.
Form
very
3528. By the way, asset
3528.
protection these days, Delaware trusts, and there are some other territories that probably may work better for asset protection.
Well, at least you don't fool yourself into thinking you're getting away.
Yeah, and you don't get into this disclosure requirements anyway.
Right.
Well, Dave, we covered a lot of ground. I really appreciate your effort in putting this together and sharing this information with us. And this is going to probably be broadcast, I think, like in March or something. So it's still in time for people to be aware when that June 30th comes around. So thanks again for being my guest.
My pleasure.
It's a pleasure having you.
Yeah.
Folks, I hope you'll find this information valuable. Get help from your tax return preparer, somebody particularly that's familiar with this. If you've got these types of accounts, you really need special help. We'll see you next time on Financial Insider Weekly.